Hi there, I'm Dean Heskin, President and CEO of Swiss America Trading, and you are tuned into our podcast, The Secret War on Cash, where we take a in-depth look, a hard look at some of the changing factors and dynamics that exist in our economy here in the United States, but also what's happening abroad. And to do this, I have my co-host, as always, Chris Agelastos. Most always, there's been only a couple times that you and I haven't been able to talk and
Yeah.
discuss these things together, but top of the morning to you. Great to see you. Sorry I'm so casual today. I was traveling, so a little bit
Oh, quite all
more
right.
relaxed.
There's
All
bigger
right, well,
problems in the world.
there are bigger problems, and
We're about
probably
to talk about some of them.
most people could care less what shirt I'm actually wearing. But nonetheless, let's get right into it. We are going to talk about the weak U.S. dollar and de-dollarization, and how that is going to push gold prices higher. Now, what's interesting, there's been a lot of, and I don't know outside of what we talk about here, Chris, what you've
Mhm.
been reading in terms of the dollar and what's going on out there, but there's probably two main contingencies or school of thoughts that I've found out there anyway. Some talking about how the dollar, is weak, the de-dollarization is taking place, and everybody is just not saying if the dollar is ever going to collapse. It's just a matter of when is it going to collapse. With that being said, however, with the weak US dollar, there are some who believe this is a very healthy thing for the US economy, because with our weaker dollar, it's having foreign investment come into our country.
Mhm.
And what they find is they find that to be a positive thing, which it can be. I would certainly agree with that. Here's the thing, however, the weakening in the US dollar, we've talked about this before, it, it is really kind of getting lost in the shuffle right now, meaning that the de-dollarization and a lot of the weakness was due to uh, n- really foreign countries, but it's been happening
Mhm.
globally, unloading our dollar for reasons that that our debt is an issue. They are looking at getting into a stronger currency by way of BRICS. There's been a lot of gold buying taking place, and so this the weakening of this U.S. dollar and the de-dollarization. That's the thing I think that's kind of getting lost in the news and the media right now, is that the focus is on just the current status of the dollar and what's happening, but it really
Mhm.
doesn't. It what kind of is getting left out of the equation or out of the scenario is the fact that this de-dollarization and the dumping of dollars is a reality. They're dumping our treasuries. They're dumping our actual currency. The reserves that central banks have holding of U.S. dollars have been diminishing greatly as well.
Mhm.
So that's where, as gold has kind of hit this, some people are calling it a little bit of a pullback or a plateau. This is something that I would tend to agree, like, this is just kind of like a recoil that's going to allow gold to push higher, because this de-dollarization and weakening of the dollar, I think, is only going to continue.
Yeah, and that's essentially what they're saying here. Most of this article is off of some comments that Tom Windmill made. He's a fund manager. A lot of people on here have probably heard of the Midas Discovery Fund, and that fund's goal is capital appreciation. Grow their money, but also protect against inflation. And provide some current income. And so they're very well entrenched in precious metals for those reasons. We all know that as the dollar falls, gold can grow and protect some of your purchasing power. So what he's saying here is all of those variables that you mentioned, the de-dollarization, just the fact that the dollar is no longer as attractive of a store of value or a reserve asset for other nations and central banks. Um, Interest rate data that's causing people to, we're sort of in this area where rates are higher than they were, but they're not as low as we really need them to be in order to grow the economy. So all of these variables have caused gold to sit at a pretty solid floor around this $4,500 per ounce range, and that's what he's really saying here is there's no data supporting gold falling. The reason gold has jumped over the last couple of years up to 4,500 is for all of these reasons that we just went over, and there's nothing there that's going to cause it to come down. So he's essentially saying, this range where we're at is a solid, comfortable floor, for people to get into. He's expecting precious metal prices to spring up quite a bit over the next year or so here, as are many others. So he's a guy that does this, like, this is what he does all day, every day. So when
Right.
he talks about things like this, you have to take him seriously.
Right. Well, and as you and I both know, and for those who've been tuned into our podcast, the one thing that has kind of been a consistent theme for getting probably 4 or 5 years now anyway is the gold predictions or projections in terms of price that were made
Mhm.
by not just one or a few but many, and how low those predictions were in terms of what it really did. When gold was
Yeah.
3,000, they were expecting it to go to 3,300 for the year. Next thing you know, it's knocking on the door of 4 grand. So
Yep.
that's where I think that as you look at not only the fact that it is pulled back and poised for a correction to the upside. My point being is that, like many of these experts have said, the upside is probably much greater than we even realize at this point. We'll soon see.
Yeah.
Now, with that said, let's look at King World News here. They talk exactly about this here
Mhm.
today. The price of gold is coiled to surge above $6,000 an ounce.
Mhm.
And for all the reasons we kind of just touched on, but one of the main things also being is inflation. And,
Yeah.
it's interesting when you hear people talk about the markets, where they're going to go up, they're going to go down, what's going to cause them to go up, cause them to go down. And again, like we just were talking about in the previous article there from Watcher.guru, the bottom line is that the inflationary pressures and the debt in particular, and what's going on with our debt, with now what the yield on treasury bonds that are reaching historic highs, which it talks about here in this
Mhm.
article, bigger than what we saw in the financial crisis of '08. I think what's unfortunate is that really the only thing that hasn't happened yet, which in a way I guess is good, but in a way bad from the standpoint, I think it really is misleading to a lot of people, and it's going to unfortunately maybe cause some people to be blindsided, is that the fundamentals of the economy are horrible right now, and
Yeah.
the reality of the economy is horrible right now. And I'm not saying that to be negative. I'm not saying that as in a sky is falling type capacity. I'm saying that from the standpoint of, I was just talking to a friend this weekend. He and his wife had gone to dinner, just to like a burger place.
Mhm.
No drinks, nothing like that. Just food, and maybe a soft drink or two. And with the tip, it was like $60. And
Yeah.
we started talking about how, like, even on your own, if you were to go, which arguably some would say you shouldn't, but go to a McDonald's, depending on what you order, you're ordering just something that would be pretty basic by 10, 15, 20 years ago standard. And it's
Yeah.
now you're not getting out of there for much less than $20, if that. And
Yeah.
so my point is, it's a reflection of the currency, the loss of value or purchasing power we have in our currency. It's a reflection of the fact that prices are just getting out of control expensive. And here's the bottom line, Chris. What's going to stop this? And why I'm talking about this is because this is what is feeding into and has fed into the upward gold prices, and why people are talking about $6,000 an ounce, or maybe even more than that.
Yeah, no, absolutely. I mean, I think unfortunately, we are in the age of $15 to $20 cheeseburgers, and we used to joke about that kind of stuff. And it seems like just out of nowhere in the last 5 6 years is where prices have really taken off, and inflation has really been beating everybody up. And when he talks about $6,000 gold in this article, literally says gold is coiled for a move above $6,000 an ounce. And you look at it, just again, not to be negative, but just all the realities of the situation we're in. We've got this conflict in Iran and the Strait of Hormuz, and that's obviously pushing up energy prices. As energy prices go up, that puts a lot of pressure on economies and stock markets. And it's not just oil, right? We've talked about how high oil prices bleeds into everything that we purchase because all of those items, for the most part, have to be transported from point A to point B, and rising energy costs cause those expenses to go up. So then you add to that the central bank situation, particularly in Asia, where they're continuing to accumulate gold reserves. They're just not relying on the US dollar like they used to for their reserves. And then add to that also, which is something we don't talk about much, is limited new mine discoveries, right? Like gold has been a valuable thing for a long time, and we've been looking for it for a long time. And the more time that goes on, the harder it is to find those reserves, right? And we never really talk about that. It's always kind of assumed, I think, that, oh, we'll keep finding this stuff and it'll keep coming out of the ground. But even as we find it and it becomes more difficult, the costs of removing it from the ground because of these rising energy prices, that causes higher production costs. So you add all those variables in, and you can see how there's so much pushing the prices that I think even saying $6,000 an ounce is conservative at this point. I think they know that we're going to see 8,000, 10,000, and even higher. But if you say a number that's too elevated like that, I think a lot of people will just tune it out. So they go in
Right.
increments and they say, okay, we're at 4,500 now, so we should see 6,000. And I think that's what they did when we were at 2,200, 2,500, saying we might cross three, and here we are, shot up and are holding strong at 4,500. So it's nothing new, and unfortunately, I don't see anything changing in the near future to give us a different result other than higher gold prices, and unfortunately higher food, higher energy, and higher everything else.
Yeah, and one thing, Chris, that doesn't get you really never hear it being talked about or discussed whatsoever. And for people who are investing of any kind, I don't care if it's in a retirement account, it's something you're doing on your own in a just a discretionary account.
Mhm.
The main strength that you really bring to the table, gold brings to the table from an investment standpoint, unlike anything else out there that people would own, is that you're talking about an asset that is being bought up daily by virtually every country throughout the world, because
Mhm.
central banks are setting records, institutions are doing the same,
Mhm.
and so silver as well. But here's my point: what gives strength to any investment is when you have a greater pool of buyers that are interested and present. And
Right.
that's what you have with gold. You have, there's like, I was talking to another gentleman a few days ago, and we talked about gold, and he had heard Russian central banks were selling off some of their gold. Maybe that's
Mhm.
true. I said, I actually personally I hadn't heard anything to that effect, but
Mhm.
understand, if they're doing it, there's probably a reason for it.
Yeah.
Doesn't change the fact that, again, these central banks, month after month after month, are setting records, and that's a good, if you're looking for a good tell in terms of what
Mhm.
you should be doing in terms of your investing, that's a really good one to use. And to know
Yeah.
that you have something that the world is not universally buying Nvidia right now. You know,
Right.
there are predominantly U.S. investors. Yes, there are some foreign investors that are involved with that, but certainly nothing near like you have with precious metals. And
Yeah.
so, at the end of this article, in fact, if people are looking for, you know, something a little more of substance as to why gold might do this, they say here, and I agree with this: gold's main driver is U.S. policy volatility, which makes investors wary of holding dollar assets. And if there's one thing I think pretty much everybody in this country agrees with, and they've done studies on this, both
Mhm.
conservative, liberals, Republicans,
Mhm.
Democrats, the bottom line is that everybody is pretty universally not comfortable with what our government is doing and the volatility they're creating. That's probably one of the
Yeah.
greatest things that again, universally we all agree on. And
Yeah.
so my point being is that, in fact, they talk about too, is one last point here, how the US, and we've heard this, is ironically, they call it the biggest holder of gold with 8.1, what is it, 8,100 tons of gold that we hold. Now,
Yeah.
that said, we've never really had that audited.
Yeah.
So
Assuming we hold it.
yeah, so like, you know, I guess that's a positive, but by the same token, even if that number is correct and there is
Hmm.
more information that would suggest it's not,
Hmm.
what we do know from that number is that they're not selling any of it. We've heard nothing
Right.
about the US unloading any of that gold. So
Yeah.
that number is probably no bigger than that, and they're
Yeah.
holding it, but it certainly might be a little less. All right.
Yeah.
So if you'd like to learn more about gold, if you want to find out more about the secret war on your cash, our cash, contact our office. You can call or text at 1-800-289-2646 or visit us online at www.swissamerica.com, all one word. And we'd be happy to offer some free information to you to help in your education process. And, ideally speaking, if you see the need there, get yourself invested and diversified into physical metals. If you're not subscribed to our podcast, please do so. We'd love to talk to you more in the future. Have a great rest of your day, and we'll talk to you real soon.
Take care.